This trading tip is brought to you by MyTrading Signals, an educational way to receive trading signals into your inbox every day and increase your profitability one email at a time. Click on the link in the description below to get your free 30-day trial to MyTrading Signals along with a 90-day money-back guarantee. Hello traders, and today we're going to be talking about the CCI, or the Commodity Channel Index. This is one of my personal favorite indicators to use in my trading, and it was developed in the 1980s by Donald Lambert. Donald Lambert created quite a few indicators for trading in commodities, like the Commodity Channel Index was created for. And he was also featured for the CCI Indicator in the magazine Commodities for its revolutionary analysis on the markets at that time. The CCI has come a long way since then, though. It is used in multiple markets. You'll see it in stocks, forex, commodities, precious metals. All different markets use the CCI now just because of how good it is at technical analysis in the markets. So now a little bit about how the CCI is calculated. If you look at a chart that just has your CCI indicator and say an RSI indicator, you'll notice that the CCI and the RSI indicators look very similar. And if you don't have the levels or the numbers on the side explaining the values to you, they're very easy to get confused. We have done one of these trading tip videos on the RSI before, so I'll go ahead and at the end of this video, give you guys a link to resort back to the RSI video so you can look at the differences in how they're calculated and what they display on the chart. For the CCI, however, what we'll be looking for in our calculation is what is called the typical price. The typical price takes our high price plus our low price plus our close price and divides by 3. What this does is it gives us the high and low, puts us in the middle of those numbers, and then shifts us just a little bit closer to the close price. How this helps us with the calculation is it uses those intermediate momentum pushes in the calculation. So it takes into account those wicks on the bullish side and the wicks on the bearish side and really pulls those in so that we know they're happening, but they're not too much one of our concerns because we're shifting towards our close price. So back to CCI calculation, it takes the typical price of the candle, subtracts the moving average of the typical price. So if we're looking at the most recent candle, we'll take the high, low, close, divide by 3, and subtract the simple moving average of those previous typical prices. And we'll repeatedly do that backwards for the duration of however many candles we're able to calculate that for. Or for our period in this case. So we'll go back our period number of candles, subtracting the simple moving average as well. From there, once we have that top number, that's our numerator, we'll go ahead and divide by 0.015 times our mean deviation. Our mean deviation is very similar to the standard deviation with the exception of the square root that the standard deviation takes. The standard deviation, like the RSI, is another one of these trading tip videos which we have done in the past. So I'll also go ahead and put the link to the standard deviation video at the end of here so you can refresh on the calculation there. Mean deviation, however, equals your moving average of the typical price at each candle and subtracts the typical price of that candle. So it's pretty much the opposite of the numerator. So we'll take that part there and then divide by the period. So we'll add up all of the previous moving average points from the typical price for our period and then divide by our period. This gives us that mean deviation, which will then multiply by that 0.015. So now that we've discussed the calculation for the CCI a little bit and we know what formations on the chart are going to cause what formations in the CCI, let's go ahead and take that knowledge and put it into our buys and our sells and our entry points for the CCI indicator. The first entry out of the 3 which we'll discuss is going to be zero line crossovers. On the CCI, it ranges from a high to a low, positive and negative, with that 0 being the middle ground. Once the CCI goes and crosses above that 0 line, we'll go ahead and enter our buy. As it goes and crosses below that 0 line, we'll enter our sell. The reason this 0 line is a powerful entry for us is if you look at the CCI as a moving average crossover, we'll see that that 0 line is where those moving averages cross over. The crossovers that we'll be discussing is if you look at the CCI as a 1 period moving average and a, let's say, 10 period or whatever your CCI period is, period moving average, once your typical price of your candle crosses over that longer term moving average of the typical price, these are the areas where you'll see you're hitting the 0 line on the CCI indicator. So as we cross below that 0 line, the typical price of the candle is crossing below the longer term moving average of the typical price, giving us our bearish entry. As the CCI crosses above, that is our typical price of the candle exceeding the moving average, giving us our bullish buy entry for the CCI. Additional entries for the CCI indicator can be overbought and oversold signals, very similar to the RSI, which we referenced before. And like I said back then, I'll put that video at the end of this one as well. But if we're looking for those overbought, oversold signals, we'll use the levels that the CCI has defaulted, which is 100 and negative 100. And those levels are picked by the creator of the CCI to account that 70 to 80% of your price action is going to happen between those lines. And that's why the denominator of the calculation uses 0.015 to ensure that approximately 70 to 80% of price action occurs between those levels. Once we exceed one of those levels, we're entering what on the RSI would appear as an overbought or an oversold signal, and we can go ahead and treat it the same way, looking for that momentum burst, where once we cross above 100, we buy, once we cross below negative 100, we sell, and then we'll really just be looking for that reversal on the CCI for our closeouts there, giving us that really quick push of momentum and giving us our second entry for our CCI indicator. Third and final entry we'll discuss for the CCI will be based off of a divergence with the CCI indicator and your chart. The divergences that we'll be looking for will be higher lows forming on the chart, and we'll be looking for lower highs forming on the CCI. This will give sort of a Pac-Man mouth aesthetic to the trend lines which you've drawn, which really shows that since we're forming those lower highs on the CCI and those higher highs on the chart, we're getting ready for that reversal point, which will happen approximately around that 50 line. With that trend line being shown, we can go ahead and get ready to enter our sell trade and catch that market reversal early on, even before we cross over that 0 lines at times. The opposing entry will be once we get the lower or the higher lows forming on the CCI and the lower lows forming on the chart. This will give us the same Pac-Man aesthetic, however, it will be heading left as opposed to right. With the lower lows forming on the chart and the higher lows forming on that CCI, it's keying us into the fact that we're about to have a directional reversal and head in the bullish direction on our chart, and that we're going to get ready and enter our buy once we see that divergence break. Now, while we had 3 entries, we're really just going to be focused on 2 different formations for our closes that'll work for all 3 of our entries. The first of which is going to be a primarily chart reading strategy. We'll be looking for our shooting stars or our hangmans or some sort of chart formation pattern that lets us know a reversal is about to occur. Once we see that reversal occur, it will typically lead the CCI indicator, letting us know that we're about to shift directions, at which case the CCI will follow with that shift as those 2 moving averages sort of merge together to show us that reversal. Chart patterns are one of the most powerful tools you can use for exits and entries into the markets. Indicators really just tell you what those chart patterns have already done. And so by looking for those chart patterns, looking for those reversal patterns will give us a really strong indication of when we need to close our CCI trades. The second exit which we'll discuss will be pretty much any of the entries for the CCI. Let's say we're in a sell trade because we crossed below the 0 line. If we start getting a divergence letting us know that we're about to have a bullish reversal in the market, we'll want to go ahead and get out of that sell. If we're in, say, a buy position and we crossed over the 70 level and then we start to, get a bearish divergence letting us know that the market is about to reverse bearish, we'll want to get out of that trade as well. While these aren't perfect indications of our exit points because it may just pull back slightly, creating that divergence aesthetic and then continuing on in our direction. We always have the option to go ahead and re-enter the buy. Whereas if we don't close out because of that bearish divergence and we are just hoping that it's a slight pullback, we have the potential to lose all of the profit we just accrued in the trade. If you'd like to add Lambert's Commodity Channel Index, or the CCI, to your trading chart, if you're using Alveo, which is Apiary Fund's proprietary trading platform, you'll go to the top right of the chart, you'll click on the icon that looks like two line charts overlapping, scroll down to find CCI, change your period, and one thing you'll want to make sure you do is Alveo defaults to close price, but the CCI is based off of typical price. So you will want to change the price evaluation to price typical. Once you've done that, click OK to confirm. CCI will be on your chart and you'll be ready to trade with it. If you're using some other platform besides Alveo, you'll go to wherever you may add on your indicators, find the CCI, make sure there that it's based off of the typical price, change your period, confirm, and start trading. This trading tip was brought to you by MyTrading Signals, a place where we not only give you the signals to go ahead and trade, but we also teach you how those signals were created so you'll be able to develop your professional grade trading signals anytime you want while you're looking at the markets. To learn more, go to mytradingsignals.com or click in the link in the description below. On top of providing top-level education for people who want to learn how to trade, our goal at the Apiary Fund is also to release these trading tip videos every Tuesday, based off of different indicators and strategies to continuously help you all improve in your trading. If you like these videos and you're interested in seeing more, let us know by clicking the like button and subscribing to our channel so that way you'll get notifications whenever we put a new one of these videos out. Also, feel free to put in the comment section of this video other indicators or strategies you'd like to see discussed in these Tuesday videos so that way we can give you guys what you want to learn about and help you all with your trading. So thank you all for watching and happy trading.